Hi, this is Brian Neal with TradeToBeFree.com. Yeah, I wanted to go over our strategies in the daily alert and weekly alert and go over some of these trades, a winning trade and a losing trade, and one that's coming up right now that may reach its entry point. And the one I want to focus on first is ROKU. Reason is because we had ROKU a couple times earlier this year out of two very strong high type flag breakouts. Okay, we had the one here in February. We featured it just before it broke out of this high type flag here in the later part of February. It had a catalyst and it took off from there and made like a 30 or 40% rise within a couple weeks. So one of the keys to this trade though is the price hitting the entry point, reaching the entry point. And a lot of people think that, you want to wait until the market pulls back or the stock pulls back and buy at that point. And, that can work. What's better is if you have a pullback or a consolidation within a very strong uptrend and a new reason for the stock to go much higher. So we want a long-term uptrend. If we go back further on ROKU, we can see that it had a longer uptrend than this, going back years. But if we see that real strong uptrend into a narrow consolidation and then a very strong catalyst to take into new highs, that's generally your best opportunity. And we can see that clearly with ROKU, how it formed that very bullish high type flag pattern. We featured it in, like I said, in February. It hit the entry point and made a big move. But the key there, one of the keys is that we had the catalyst and that it reached the entry point. So we don't jump in unless it hits that entry point. Okay, and again, here in May, we again had a high type flag. We also had a double bottom pattern. And with that very strong catalyst, the second one here, also on an earnings report, once it hit the entry point, the price confirmation point where we're confirming a trend back to the upside, okay, out of the consolidation, all right, we can see it made a really big, again, 40% plus move within a few weeks, okay? So these strongest patterns in these strongest uptrends, when they go and hit a good entry point with a big catalyst, that's an ideal situation. And here we are again after earnings report, and we just had another big beat. I believe they raised guidance too, and again it may hit that entry point and run again, although in August generally they don't run as far, and with this higher volatility we have right now in the market, there's a good chance it won't make as big of a move. So we'll have to see how this plays out and if it hits the entry point or not. Okay, so on something like this, we want to play it with a fairly tight stop loss. Okay, so I think on this week we're looking at a stop loss of 108.33. The entry point is a move above the high. Okay, and actually if we see a pre-market high higher than that, then we want to wait for the break of the pre-market high. So whichever price is higher, as confirmation and a breaking out of the resistance into new highs with that big catalyst to hopefully carry it, another 15-20% or more. I think the target on this one is about 135 for a final target, taking some off at 121. So, but one thing I want to stress though in this video is that we want to see the price confirmation. I won't enter a trade like this with this narrow consolidation out of a within a strong uptrend. I won't play this until I see the price confirmation, and so I want to see the price hit that price point and go above it before jumping in. And it's very sort of quick at that point. It may hit that entry point and jump 5-10% within an hour. So I want to make sure that I either have my price alert or my buy stop order in to make sure I'm getting in at that ideal entry point on these big momentum trades. Okay, so I just want to make it clear that we wait for that price confirmation. We want to make sure that we have confirmation that the price is moving in our direction, out of this sort of short-term downtrend and consolidation here. If we get in through here, sure, that may work out, may not. It may consolidate for another few weeks, month, come down here, and who knows what will happen at that point. So we want to see confirmation that the price is trending back higher, and that's one of the key things in our strategy is to make sure we have that confirmation that the trend is going back north in our favor. Okay, I also want to go over a couple other trades this year. This is another descending wedge, okay, and this was a another top growth stock. We tend to focus on top growth stocks and stocks beating estimates with rising future expectations. On this one, we said that so our target entry price was a close above the top trend line. So what you can do is once you see that, you can check it each day after work, and you can see when that occurs. So here we can see in early June it closed above the top trend line, and you can put a market order in at that point, or you can put a buy stop order in above the prior day's high, a little above there, okay. And then once you enter the trade, we've got a stop loss that we have that you can use in the alerts, okay. You want to put a limit price for your target sell price. In this case, I think it was around 130 and change, 132, around the new highs. And so you could have put your stop loss in there. Given that it got off to a real nice start, starting in here, initially it went up 5-10%, it looks like. Okay, so that's a pretty good start. And then we had another entry point here out of a couple of handle pattern. So at that point, you can look at it and sort of wait for a close below the 9 EMA or 10-day moving average. Okay, we've got another chart here that we like to use that shows the 9 EMA and the 20 EMA. You can put these on any charting service you have, whether you have Stocktwits.com or telecharts or your broker charts. But you can wait until it closes below the 9 EMA. In this case, we're heading into earnings, okay, up in here. So we want to get out ahead of earnings in the alert service or in your brokerage platform, or you can find it anywhere really. But you can put it on your watch list here, and below the watch list or the chart in the watch list, you can see the latest earnings date right here for NSP. So you can click on that. That link will show you the latest next earnings reporting date. Okay, so that tells you that, hey, if you want to stay in this, you're taking a chance on earnings. With our trading rules we have on the site, with each alert, you've got the link to the strategy, and the site goes over the strategy for momentum plays and for swing trading setups. And over here we've got a link to the important trading rules and goes over the swing trading rules here. And then down here you can see, we generally get out before earnings unless they beat by a wide margin each quarter with a good quarter for earnings. So stocks are running higher after earnings. This quarter we're seeing a lot of stocks with declining estimates, and so there's more risk, usually more risk in the second quarter. And right now we're seeing a lot of companies come out with lowering guidance, so generally we'll be out ahead of earnings. And if they do beat by a wide margin on average, and those estimates are rising into the quarter, we might keep a portion through earnings, but generally we're out before earnings. So following the rules in our strategy, you'd go ahead and sell any final shares that you still have ahead of the earnings report. Now, sometimes it'll have a really good earnings report, rising guidance, and it'll continue on and might gap higher and move higher from there. If they lower guidance or have a disappointing release in terms of earnings and sales this quarter or this past quarter, you're going to have negative reactions like this. Okay, so that's why we say get out before earnings, and why we have the links to the earnings release date in the alert service when you put those stocks in your watch list. And that way you can keep track of that very easily. In Thinkorswim, they'll have the little blue icon in there so you can quickly see whether the stock has earnings coming up, and there might be other icons or some other alerts in your trading platform. Okay, but you always want to keep track of when the next earnings release is for a stock. And, because they can work out great and move a lot higher after earnings. If they disappoint, lower guidance, they're going to go the other way. Now, if you do want to gamble on the release and hold some through earnings, what you can do, this stock I know after the earnings release, it gapped lower. Okay, started gap lower after hours. And I think it was down in these 130s area after hours. And you could have put a limit order in after hours to get out, before the next day, before this happened. the next day, or with this kind of a profit at this point, you just stop at your entry point, and if it does come down through the entry point, you're out at break even after taking the profits through here. So holding through earnings can work out great. It can go against you too. So if you do hold through earnings, I would definitely look to see after hours how the price is reacting. And if there's a negative reaction and I'm taking a gamble on the earnings release, I'll just cut it after hours, put that limit order in for, any good price at that point that I can get, and just get out of the trade, get out of the rest of the shares on the trade. So, but that one worked out really nice with the rules in our strategy. UBNT is an example of one that didn't. And if you can see here that, a lot of people like these, recovery trades where, you get a move down, big move down, and you got this consolidation through here. And generally wouldn't trade this, but the long-term trend was very good on this. And if we go look at the 200-day moving average and the longer-term trend, we can see that that long-term trend is still in place, and we're still above a rising 200-day moving average. Okay, so in this case, we don't want to see this, but this channel through here was looking pretty good, and if we get a move above this channel after testing a few times, that can be a good opportunity for a trade back up to the highs. Now, we have a stop loss, of course, with each trade, and if we go back into this channel more than halfway or so, or definitely go below the low in the channel, then we want to get out and avoid further losses. So you can see that after it hit the stop loss point, we exit the trade and prevent any further losses as it continues to go down. So I just wanted to kind of give you a couple examples of a winning trade and a losing, and go over that, and make sure you're looking for that confirmation, because a lot of times the price won't confirm by hitting the entry point. Usually the entry point is above the current price, okay, confirming a new uptrend to resume the longer term uptrend after a consolidation, okay, and that's our entry point. If you just wait for that confirmation, you actually avoid a lot of losing trades, okay, and that's a great way to increase your win rate. So, okay, that's about it for now. Hope you learned something. If you have any questions while using the alert service, go ahead and email us, and we'll go ahead and incorporate those questions into the next video, and we'll give you more information that way. Right now, the earnings eruption strategy and the high type flag strategy are two very good type strategies that work well in a more volatile market. So you can check those out on the site. And if you have questions about those, go ahead and email us, and we'll answer those and get you taken care of. Okay, thanks so much. Have a great day.